Welcome to Cambridge House Live. I'm Bridget Anderson and I'm joined by Jordan Roy-Byrne. He's the editor of the Daily Gold. Thanks for being here, Jordan.
Well, thank you so much for having me.
It has been a tough time for precious metals, so let's talk about the way forward. You recently wrote an article and it was 6 reasons why gold stocks will begin a big rally. So let's start off first, what you're seeing to kind of give that foundation, the conditions for the rally.
Well, it's an obvious understatement, Bridget, but we're seeing oversold conditions, and really to a degree which can be termed as extreme. You know, sometimes people say things are oversold or very oversold, but we're really extremely oversold. And in that piece I wrote, I think the first reason, if you look at momentum indicators such as the RSI and you compare it to the last 20 or 25 years, it's extremely oversold. Another reason, I believe my second point, if you look at breadth, which is participation, how many stocks in a market are going up or going down. Obviously we have everything has been going down, so the breadth indicators are also extremely negative, and they've been extremely negative for a protracted period of time. So this is a market that's been oversold, not just for a little while, but for several months.
Did the drops in April, did the size of them and just how sudden it was, did that surprise you?
Not really, because what surprised me was how quick we had that breakdown in gold, which really occurred over a 2-day period.
Yeah.
And the action in the shares, which usually lead the metals, has been negative for a while. So the shares were hinting that there was further weakness to come in the metals.
Okay, so going back to your article, you said there's seasonality plays a part here too for what you're seeing as a big rally. Talk to me a little bit about that.
It's interesting because most people look at seasonality this time of year and they say it's negative because, of course, there's a positive seasonality after summer with the Indian demand, and so that's normally the time you want to buy. But if you check back in this bull market over the last 12 or 13 years, April or May, kind of the late spring, has been a turning point. It's marked a top or a bottom for most of the years, I believe, except maybe 1 or 2 years. So it makes sense, given where we are now, we're extremely oversold. And the same thing happened last year with the bottom in May. Given where we are right now, it looks very possible that we're going to be at a bottom and we could rally into the summer.
Okay, and so going through your thinking here, point number 3, a selling climax already occurred and the recent low is a false breakdown. So what does that tell you?
I don't want to get too technical and turn people off, but the GDX, which is an ETF for the miners traded in the U.S., it was down, I believe in April, 24% over a 6-day period, and the volume was huge. I mean, it was just over a 5 or 10-day period. If you look at the volume, it was so much bigger than at any other time in the history, and that means you have a selling climax, and so that was a low, and the market has to retest that low. And so sometimes a market gets really oversold and then it makes a new low, but it can be a false breakdown. So I think we have to be, I mean, obviously right now the stocks are continuing to struggle, but we do have to be on alert for a potential reversal and strong move higher.
Well, and what you say is interesting, that it's possible the correction could last a bit longer and move a bit deeper, but the next big move is higher.
Right. The chart that I put in there, if you compare this bull market to the last one, which was 1960 to 1980, in terms of the gold stocks, they had 2 huge corrections there, kind of in the towards the middle of the bull market. They had, I believe, if you look at the Barron's Gold Mining Index, it was down at one time 61% and then 67%. If you look at the Huey Gold Bugs Index, 2008, it corrected 71%, and where we are right now, we're close to a 60% correction. So it's funny, people say, oh, this is unprecedented, but just look back at history. Look at the 1960 to 1980 bull market. There were 2 really severe corrections, and so judging, if you look at the current correction and compare with the 2008 correction and then those 2 big downturns in the last bull market, it tells you on a graph that, yeah, it's possible it could last a little longer, go a little bit deeper, but basically we're 95% through at the worst.
And you point out that cyclical rebounds usually are huge in percentage terms. So that to me sounds like great buying opportunities either here or shortly here.
Right, and that doesn't mean that we're going to bottom tomorrow or the next day or the next week. I mean, this market could kind of go sideways for a little while, but obviously given all these factors, the odds favor that the next move is probably going to be higher.
And do you ever put estimates on it or any kind of outlook when you think like how much higher is it going to go? Do you get into that prediction?
Well, sometimes we do. I mean, looking at the Huey Gold Bugs Index, I believe it's in the 250s right now, and there is a strong target at 320. So if the market over the next week or so is able to hold and start moving up, 320 is something we could look at as a potential target over the next, say, 2 months.
All right, Jordan, thanks very much for your insight. I appreciate it.
Thank you so much for having me, Bridget.